Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, Abu Dhabi Airports Company has reported strong double-digit growth of 12.6% in passenger traffic for the first half of the year compared to the same period last year. During the first 6 months, the airport welcomed 7.9 million passengers and 65,072 flights, representing a 10.4% increase in aircraft movement compared to H1 2012. Cargo traffic also increased in the first half of 2013, with 325,737 tonnes of cargo passing through the airport, a 21.5% increase compared to the first 6 months of 2012. Bangkok, London, Heathrow, Doha, Jeddah and Manila were the top 5 destinations that registered the highest passenger traffic during the first half of the year from Abu Dhabi International Airport. India recorded the highest traffic for the first 6 months of 2013, growing by 18%, followed by Saudi Arabia, Germany, Thailand and then the UK. Dubai's residential sector is experiencing widespread growth, with some secondary locations outperforming prime areas during the first quarter. That's according to the latest report. The latest Dubai Market Overview by CB Richard Ellis reveals that the total value of residential property transactions reached 28.8 billion dirhams in the first half of the year, with 23.2 billion dirhams being transacted in cash, around 80% of the total market. Dubai Marina recorded the largest number of transactions, with 3,748, amounting to over 6.6 billion dirhams. While Emirates Living, Palm Jumeirah and downtown Dubai also continued to dominate the sales market, with the majority of all transactions both in volume and sales terms. Meanwhile, new master-planned communities emerged as the best performing locations in terms of rentals.
Both markets have been very strong, particularly over the past kind of 18 months, where the residential market has been leading a recovery. This quarter has seen residential rents increase by around 7.5%, and that's actually been driven by quite a notable improvement in the performance of some of the secondary locations. So I think initially in the recovery we'd actually seen the prime community-led developments performing best. We're now actually seeing some of these secondary master plan locations start to see some quite considerable improvement. So we have the likes of Jumeirah Village seeing a 10% increase in quarterly rental levels, which is obviously quite significant, and now that's up around about 25-30% year on year. And then the sales market, I think the rental market has actually probably slightly outperformed over the past kind of 18 months. Sales growth has been quite solid as well, but it's probably been just slightly outdone by the leasing performance. Some of the key prime developments such as downtown, Palm Jumeirah, Emirates Living are continuing to see very strong sales growth and very strong demand from investors, particularly the likes of Dubai Marina is seeing, I think, the largest component of all investment activity and transactions, and that's been something which has been playing out consistently over the past quarters.
The report also showed that Dubai's office market continued to experience rising demand, with new leasing inquiries and live requirements, reflecting the improving state of the sector.
It's a very fragmented market now, the commercial office sector. We have a situation where you have very high headline vacancy rates, but if you're looking for good quality grade A space in prime locations around about the CBD or in some of the popular free zones such as TCOM, then the actual level of availability is very low. And we're finding that the corporate occupiers that we're dealing with looking for large space requirements, they're struggling to be able to actually find suitable space. So despite this high headline vacancy rate, the actual level of good quality space, particularly for larger requirements, is very low.
And additionally, a new report from Azteco has revealed that average residential rents in Sharjah have seen a rise of 16% over the last 12 months, off the back of an increase in rental values across Dubai. The report stated that the hike in rental values has sparked a reverse relocation trend, with tenants looking to Sharjah for more affordable accommodation. Commuter areas including Al Majaz, Al Nada and Al Qasimiyah have seen average rental increases from 16 to 27% since Q2 2012, while villa rental rates have witnessed a 12% rise for villas located in Al Khan, Sharkan and Al Quz. Commodity and currency markets made significant gains against the US dollar as a relatively light economic calendar and improved corporate earnings from Q2 saw risk appetite increase. The euro closed the week at a one-month high against the greenback, with gold also closing its third consecutive week higher against the US dollar. The losses for the US dollar could be limited as the week ahead promises high levels of volatility off the back of a busy economic calendar. Markets will be watching Ben Bernanke's decision on Wednesday to get a hint of when the FOMC plans their taper, and an improving US data docket will continue to support the US dollar. To talk more about this, we earlier spoke to Gaurav Kashyap, the head of futures at Alpari Middle East, to get a more in-depth view of the week ahead.
Well, after a relatively weak economic calendar last week, we're gearing up for a very stacked economic calendar in the week ahead. Now, we are going to be focusing on the Indian rupee. The Reserve Bank of India will be meeting tomorrow to discuss their repo rate and their overall cash reserve ratio requirements. Now, we're expecting both of these to remain unchanged, largely because inflation has been on the wane and the Indian rupee has been depreciating against the US dollar. So a rate cut is very unlikely in this situation. And on the flip side, the RBI really can't afford to increase rates at this moment to protect their Indian rupee because of growth being at decade-long level lows at 5%. So overall, we expect the Indian rupee probably to focus more on external factors such as the performance of the US dollar. Now, it's a stacked calendar for the US economic calendar. The FOMC will be meeting and will be announcing their rates on Wednesday. Overall, we expect Ben Bernanke to maintain his dovish tone. He will be waiting to see how the US data progresses, to see how and when they will be looking at exiting their programs. But overall, his tone and his body language will remain the same, and we expect the US dollar to make continuous gains as a result of those meeting outcomes on Wednesday. If we look at the US economic calendar, another figure we'll be watching will be US GDP figures, which are expected to come in at 1%. And of course, this will be all capped by Friday's US non-farm payroll number, which is expected to come in between 185,000 and 200,000 new jobs on Friday when the figure comes out. So overall, once again, the focus will be on the US calendar, but we expect the US dollar to make some significant gains in the week ahead.